All right. So this is the, I think these are the questions that you had. You had the questions. So your cash book at the 31st, your cash book at 31st December 2013 shows a bank balance of 565 overdrawn. On comparing this with your bank statement at the same date, you discover the following: that a check for 57 drawn by you on 29th December the same year has not yet been presented. This is an unpresented check, in short. You have an unpresented check, and a check for 92 from a customer which was paid into the bank has been dishonored, and you also have a dishonored check. Then what is correct? What is the correct bank balance to be shown in the statement of financial position? Yeah, that is in the balance sheet, in short. What is the right or the correct bank balance? What is the correct bank balance to be shown? So what is the correct bank balance? Anyone can try. What is the correct bank balance? What did we write?
473.
Okay, 473. Why do you say it is 473?
When you look at the adjustments, number one is a check for 57 drawn by you has not yet been presented. So it hasn't yet been cashed in at the bank. So that money is still there.
Okay.
Then number two, it says a check for 92 from a customer, which was paid into the bank on the 24th, has been dishonored. So initially we had recorded that we received the 92. But because the check has bounced, we haven't been paid that 92.
Okay.
So we have to subtract that 92 from the 565.
Okay. All right. Interesting. Any other?
So from the, I think we have an overdraft, which means we are on the credit side.
Credit side.
Yes, and it means that money is the bank has got no that money, so it's sitting on our credit side of ours. And then we have also drawn the check of $57. It also has to sit on the credit side. Because we have drawn it. Then the bank also, the check of 92, which was also dishonored. So it also sit on the credit side, and we total it up to 714 as overdrawn.
Okay. All right. So so what is there is we need to check the entries of this, right? How they are recorded. So once you find the keyword overdrawn, check the word overdrawn. The overdrawn means it's a credit entry. Okay. So it means it's on the bank balance. This is the negative side of the bank balance, right? It is on the negative side. You know, this is your cash book. It has got the two columns. So it is on the credit side. Then you have an presented check. So unpresented check always have got a non. It has got a credit entry. It has got a credit entry because when you have drawn a check yourself. So once you draw a check, then it means you are giving out, right? You are giving out. So you have the credit entry. And for what's this? For dishonored checks as well, it's not a debit, meaning you have not received. So that check was dishonored. So a check for 92 from your customer. Look at this. A customer gave a check, you deposit a check, but that check has not received the money. You've discovered that the money didn't enter. So what do? Remember at first when you just received the check, before it could be dishonored, you had to record, right, on the debit side. So now you have realized that this check is not giving you the money. So to clear that other side, that balance, you have to enter the opposite entry, like which is you should enter on the credit side, which should reduce this amount or like to subtract this amount that you had. So an additional check has got a credit entry as well. So it should total up to 714. Are we all fine, or there is some other view from somewhere?
Hello?
Yes, sir.
Yes. Just kindly explain more on the bank balance when they just say it's was overdrawn by that amount.
Oh, bank. Okay.
Yes.
Okay, this is basically a cash book. Okay, so observe that a cash book has got two columns. It has got the bank side and the cash one. Okay, now we are concentrating on the bank column. The bank column, which is on the debit and on the credit side. So they're saying that your cash book at 31st December shows a bank balance of 565 overdrawn. Now, this word overdrawn simply means a credit entry. In short, they're just guiding you that this balance is not a debit. It's not on the debit side. Remember, the bank balance can either be on the debit side or it can be on the debit or credit. But to guide you that this entry is on the credit side, you have the word overdrawn. Did you get that? Then from, I think we just asked about overdrawn. Yeah, the word overdrawn, just trying to show you that to mean a credit entry, in short. Hello? Is the questionnaire fine?
Yes.
Okay.
So like you said the last time, where you said the figures on the credit side of the cash book should be the same as the figures on the bank statement on a debit side. So just looking at the question there where they say, what is the correct bank balance to be shown in the statement of financial position? So here they are meaning it's from the debit side, but we can also find the same answer using the book on the book side, on the credit side.
Okay. Oh, thank you very much for that. For that addition. Yes. So just as we said last time that always once the cash book has been updated, you find that the figures have to match. We showed that last time. Yeah, just in the last time's class. Now, the following information relates to a bank reconciliation. You have the following information relating to what? To a bank reconciliation, and it is said that, number one, the bank balance in the cash book before taking the items below into account was 30 credit, right? Overdrawn. This was the bank balance, overdrawn. The bank charges were these. Okay, you had the bank charges. okay, that have not been entered in the cash book. And the bank has a credit. The bank has credited the account in error with this 425, which belongs to another customer. And there is a check payment totaling 3,275 that has been entered in the cash book, but has not been presented. Okay, this is a presented check. Then there is also a check totaling 5,380 that have been correctly entered on the debit side of the cash book, but has not been paid at the bank. So the question is, what was the balance as shown by the bank statement before the above items? Before taking the above items into account. So before the items were taken into account, what was the correct bank balance?
$8,970.
8,970. Do we have that option here? Hello? That option is not there, right? Yeah, any option that is here. You're analyzing the question. What is the solution? And there was silence in the land. Okay, what did you write? Like I guess everyone wrote. What did you write on this one?
You have stopped sharing. Hello? Hello?
Hello, I was saying hello.
You've stopped sharing.
Oh, okay. I'm sharing. The mic went off and I was talking. Then he realized that this network performed.
Okay, we can't see the figures, but
Okay. Let me show you the figures so that you comment on what you are seeing. Should be able to see what you're commenting on. Okay, it's here.
Okay, so they are saying before what was shown before considering this. So we have been given the balance there, which is 8,970. So I think it's before the bank had removed all these charges. So we need to add the bank charges to 8,970.
How much is that?
That will come to 8,970 plus 150. 9,520.
Okay.
So it's just that because the number 3, it's the error. We are not going to consider it. And the number 4 is the check which has been entered on a cash book but not presented in a bank. So me, I considered A to be the answer. I didn't include the other stuff because they are not supposed to be in a bank statement.
Okay, interesting. Any other concern or any other answer from someone? Do you remember the question says, what was the balance as shown by the bank statement before taking these items into consideration? Anyone else, or we wrote the same answer? Or we have the same explanation?
Sorry, sir, I never attempted this one. So.
Oh, okay. Okay. Anyone else? Like when you are writing, how were you arriving at the answer? Yeah, no, you need to understand these questions because these questions are most like they may be repeated, especially that they are not yet marked and are not given solutions to you. So the most likely, or they can be repeated but just twisted a bit. So you need to understand. That's what we are trying to do, to make you understand. So now observe.
Hello, sir.
As yes, sir.
Okay. Yeah, so the answer is 9,520 because on the cash book, it was showing 8,970. So without the bank charges, if we had the bank charges to give us 9,520, because these other figures, they were not supposed to be on the statement.
Okay. What is 8,970 plus 550? 550.
9,520.
Okay. So just as explained, yeah. So what is happening is that we are not considering these numbers that are not there on the bank statement. Remember, we are just concentrating what is on the bank statement. Okay. Maybe let me just pass a comment that this figure that you are seeing, where is it? The cash balance, cash book before this figure of the cash book before of the cash book before these adjustments, it is the same amount that is there on the bank statement. Okay, because it means that we know that the cash book keeps on being adjusted time again and again. So this time around they had to adjust the cash book. Last time they had adjusted it last time. So last time they had all this. Okay, and they have the bank statement. Like when they adjusted it last time, they had this balance. So this balance was equal to what was there in the what? They had this same balance on the bank statement. So when they include the bank charges, the bank statement will have the bank charges because they are aware about them. But when you check things like checks, the checks are not like for these checks, they'll be in the cash book. Like, yeah, that's what we explained last time. So like the bank is not having them, and they don't need to be considered because they're saying that you don't have to, like, you have to give the balance before these items were considered. I don't know if you got that. It's just a repetition of what I was saying. Did you get that? All right. So that is how you get your answer to be A. Then, what is an error of commission? What is an error of commission? Question number 3. What is an error of commission? Friends,
Can
do
I
you
try
remember?
it?
Yes, madam.
Errors of commission. These are amounts that are correct, but they're entered in a wrong person's account.
Okay. They are amounts. Come again.
That are correct.
Okay.
They are amounts that are correct, but they're entered in a wrong person's account, in another account.
Okay. In the other account, same class or different class, because that's the key word we are looking for. Same class of the accounts or different class of the accounts, because accounts are classified, just as I said last time.
Same class.
Okay.
It has to be in the same class.
Okay. Okay, let's start with the number 1. Why is number 1 not the correct answer? Anyone?
That's an error of omission.
Omitted.
Exactly.
Error
So
of omission.
the first one is an error of what? Omission, where the transaction has been completely what? Omitted. We call this as the error of omission. So that's why it doesn't qualify to the answer. Let's come to number B. Different class of the account. Isn't B the answer or not the answer?
So number
Not
B.
the answer.
It's not the
Number
answer.
B is a error of original entry.
Okay. B is the error of original entry. Anyone else? This is getting interesting. What about B? What error is B?
That's what I'm saying. It's an error of original entry.
Okay. Can you define for us what the error of original entry is?
Okay, so this is the error where one side of the transaction has been recorded in a long account, and that account is of a different class to the correct account.
Okay. Interesting.
It's an error of principle.
Yeah. What about an error of principle? Explain what it is.
An entry that is entered into a wrong class of an account.
Okay. All right. So this one is an error of what? Of principle. Okay. The error of original entry. Okay. Anyone to say something about the error of original entry? Okay. So with the error of what is happening is that you're just recording like the wrong figures. You have recorded the wrong figure on the other side and the other figure on the other side. Like you have recorded wrong figures. Okay. It's not really the same as the transposition error, because the transposition error, this is where the figures are transposing. The 42, like your trans is the error of both. So basically, that's about it. So anyways, the answer is what? Is it C or D for this question?
It's C.
Okay,
C.
the answer is C. Okay,
C.
it has to be the same. What is the error of commission and the error of principal? The class of the what? The classes of the accounts. Okay, the principal is different what? Different classes, right? Then for commission is same what? Same class of the accounts. That is for the commission one. Did you get that one? Why isn't D the answer? It's very important that we discuss. We're just discussing and revising at the same time. Why isn't D the answer?
It's
Because it's an
a
error of
transposition.
transposition.
This one is an error of what? Transposition. Yeah, the error of transposition. So say, okay. Interesting. Now we have got this one. Your payables control account. Your payables control account has your payables control account has a balance at 1st October 2018, 34500 credit. It's a payables control account. Now, during October, there was a credit purchase. The credit purchase of what? Of how much? How much were the credit purchases? 700 and what? 78,400, isn't it? Those are credit purchases. And then cash purchases were 2,400, and the payment made to suppliers excluded the cash of purchases. And after deducting settlement discounts of 1,200, we had the 68,900, and the purchases returned were 4,700. Now, let me highlight that when you're dealing with the purchases control account, the payables control account, we have these are people who owe you, right? These are people who owe you. So you record the credit balance here, and you also add to the credit balance, you add the credit purchases. You have that. Then now, before that, Sayo, stop too much. Allow people to talk. So what do you think, or where do you think we need to record the, let me say, the discounts, the settlement on the discount? Is it on the credit side or on the debit side? From your basic knowledge about the control accounts.
Sorry, what's your question, sir?
I'm asking that where do the discounts fall? Do they need to be recorded on the debit side or on the credit side?
Debit.
The discounts are recorded on the opposite side, on the debit side, which is 1,200. And why should it be on the debit side? That's my question again. What does it mean?
What?
Because we are receiving.
Okay. Interesting. Any other?
Discount. I thought discounts you are losing.
Okay, this is like you have received a discount. Remember, you are
Or
you
receiving the
owe.
discount, not giving a discount.
Remember, you owe yours. These are payables. Like you owe the people. You owe those suppliers of yours. Okay. So, what impact does the discount have to the Nkongole that you have, to the credit that you have? Does it reduce the credit or increase the credit?
It reduces.
Does it? It reduces, so you record on the other side of the amount to reduce, right? Which is on the debit side. Then you come to the payment. When you make a payment, which how much was the payment? 68,900. I've already recorded it. So the payment is recorded on the debit because it's a reduction, right? It's reducing the balance. This total credit that you have, your total credit is reducing because of that amount, right? And then the purchases return. Where do we record the purchases return? Is it on the debit or credit side?
Credit.
Credit. Interesting. Why should it be on the credit?
Because you're giving it out, you're returning. I thought the rule was to credit the giver.
Oh, okay, interesting. I was saying, in other words, you should be looking at it. What impact does it have to the credit or to this credit you have? Remember, this is the total credit you have, right? What impact does it have? If it increases the credit, you should record it on this side of the credit time. If it reduces the credit, record it on the other side. That's a basic principle of the control account. So, so the purchases return, where do we record them? Do they reduce the credit when we return the goods that we remember? Purchases return means we have returned the goods, right? When we return those goods, please, what happens to the credit, to our credit that we owe, the amount? Does it reduce or increase?
It reduces.
It reduces.
It reduces. You have returned the what? The goods. So you should record the purchases return on the other side, right? Is it? This is your payables control account. So now the question is, what was the closing balance? We need the closing balance. We can balance up this account. What is on the debit side? 34,500 plus 78,400. What do we get?
Uh, 112,900.
112,900. Then on the debit side, what do we get?
$74,800.
74,800. All right, 74,800. Now, look at this. So we have to like write the both sides. Then the difference which will be the balance carried down, right? Balance carried down.
Yes.
The balance carried down.
Which is a 38,100.
Balance carried down what? Like
38,100.
Like this, our answer is A, right?
Yes, the answer is A.
Yeah, it's A.
The answer is A. That's the closing balance. So this is just some basics from the control accounts. I'm not sure. Did I comment on the control accounts? I haven't talked about them. Did I talk about it? I've forgotten. Have I talked about the control accounts? Just remind me. Maybe I talked about them somewhere. I haven't.
I think
don't think so.
you only did a bit during that assignment we had, but you said you do it in details.
No, we need to do the control accounts. So anyway, these are the basics, but we'll have to do the control accounts. Yeah. So that's how you find the answer, anyways. That's about the payables control accounts. If you have got the sales, hello.
Yes. I just want to find out the payables account. The reason why we're doing, like, for example, if we say we retained something to the supplier, that means this account is actually not the entries which are there are not ours. We're actually assuming we are doing it for the supplier. Like, for example, if we retain, that means it's the one who's going to receive. That means that's why we are debiting returns and everything that's being given out. That's being received, we're putting them on the credit. Is that the way it works?
Okay. Class, is that the way how it works? I want you to participate in this because we are just revising. Is that how it works? Hello? There is silence in the land. Okay. The easiest way of looking at the control accounts, right? The easiest way of looking at the control accounts, the payables control account and the receivables control account, right? It's like this. Let me start from the payables. You owe people, okay? They give you the credit balance. Usually what's this? The balance brought down for the payables control account is on the credit side. You owe people that same amount, which is the balance brought down. You owe them. Okay. Then to what you owe them, this is just a format. You have to add the credit purchases. Okay. Okay. Let me start like this. You have this amount that was brought down. So now all these other transactions that you'll be hearing, you have to check, does this increase this credit or it reduces this credit that you owe those people? Assuming you owe these people this amount, the balance brought down. I'm trying to make it simple. The balance brought down, you owe them that amount. Then number one, you make a credit purchases again now. Okay. Like during October, now during the month, you make a credit purchase. When you make a credit purchase, it means your credit is what? It's increasing, is it? You make a credit purchase, it means you have not, your credit is increasing, right? That's how you record the credit purchases here, this amount on the credit purchase, because it is increasing, right? Then when you come to the discount, you receive a discount. Does receiving a discount increase the credit or not? If it is increasing the credit, you record here on the side of the credit. If it is not, then you record on the other side so that it can reduce the credit. Once you record on the opposite side, it will have to reduce that. Yeah. The discounts, they reduce that. Then you make what do you call? You make payment. Once you pay, it has to reduce. So a payment will always be this side. If you make maybe a check, you pay a check, it means you have a bank this side. You make a cash payment, you have cash payment here. You have returned the goods. Once you return the goods, it means these guys, they have to reduce, right? they have to reduce the amount that they have written that you owe them, because you have returned their goods, so you no longer owe them. So that's how you record those goods, like you write on the debit side. Okay, but anyways, we'll shed more light. Should be on Sunday when you're having the control accounts, when you're having accounting, right? I should be able to speak louder on the control accounts. Yeah, did you get the idea behind that?
Yes, I think it's clear.
The receivables control account. Yes, they have the just say sales control. So how make the credit sales, you record this side. What is happening is that those people now, they owe you, right? To make credit sales, it means you have supplied to other people. So those people, they owe you. So since they owe you now, if they pay cash, that cash that they have paid, you should record it on the other side, because that cash is reducing this balance that they owe. This is now for the receivables, control account. If they pay a check, you should record it this side, right? If you allow it, you allow it this side. You get it, right? If they make a payment, any form of anything, you record this side, isn't it? But if it is a dishonored check, remember they write a check, but it is dishonored, you should record the dishonored check to this other side, like adding to the credit, like, yeah, trying to cancel the balance. Anyways, I like notice when the fullness of time comes. Idea behind. Okay. Anyways, funding. All right. Question number 5. Question number 5. Question number 5. An organism restores its organism, and
So you're breaking. I don't know if it's just me, but you're breaking. I
organization.
can barely get what you're saying.
Yes,
Okay.
it's breaking.
Okay. Is there an improvement now? Hello? Are you
Yes.
able to hear me now?
I can hear you now.
Okay. So
We can't hear you, sir.
5 in the pet book. Hey. Okay. Can you hear me now?
Yes,
Hello. Can you hear?
we can hear
Okay.
you. Maybe you can start explaining from the other one.
Question number 4.
Yes, the last part.
Oh, what was the last part?
The opposite. And the receivable.
Oh, the receivable one. So I was saying it has the debit entry. Okay, balance brought down is here for the receivables. So once you make credit sales, it means you are debiting your receivable, your sales account. So you should record here like the credit sales here. Then now these people, they owe you, right? You have the people that owe you. You're not the one owing as a business now. Like you have people owing you. Those are your debtors. So once they make maybe a cash payment should reduce this amount, this total credit. So you should record it this side, like a cash payment. If they pay a check, should record it on the other side as a bank. It should do, if they make you allow a discount, you should record here. So you just check the impact of the transaction. What impact does this transaction have on the credit that these people owe me? Okay. Does it reduce it or it increases it? Did you get it?
Happy.
Okay.
Hello, sir.
Madam.
Yes, now on both sides, you have to put debit.
No, like this side is where we have debit, the other side is credit. Like, just like a normal T account.
Okay,
yeah.
it's clear.
Okay, question number 5 now. Question number 5, what's the solution? Hello? What is the solution on question number 5? Have you seen the question? There is an organization that restores its pet cash book to 250, right? At the end of each month. Now, during the month of October, these guys have restored they have totaled their expenditure in the pet cash book as 210, and the interest was restored to this same amount. The interest was 210. The analysis columns posted to the nominal rate totaled to only 210 or 210. So now the question is, it totaled to 200, question not 210, to only 200. So the question is, which of the following would this error cause? There is an error here. So the question, maybe let me start from asking that, what is an interest? What do you understand by interest? Anyone? What comes in your mind when you hear an interest? I know you are tired of learning. We are doing this last question, but please, yeah, just for this one, you can be strong a bit. What do you understand by an interest?
Maybe I can try, sir. It's just something I researched, though.
Okay.
I can just read. Okay. So is a cash account maintained by a company to pay for small incidental or routine expenses, something like that.
Right. Exactly. That's what an interest is. That is what an interest is. So my question is, now we know the interest. We know what the interest is. So my question is, what does this error has? What is the cause of this error? What does this error cause?
I think it is an undercast of $10.
Okay. There will be an undercast of $10. What do you mean?
Because what's supposed to happen is automatically, as she explained, that amount every month is supposed to be restored to 210. But in this case, only $200 was given to the, I don't know if it's the cashier, that same amount.
Mhm.
Yes, so it's supposed to be 210. So there's an undercast of that $10 to reach to 10.
Okay, so what is the answer?
The answer is D.
Someone is saying D. Someone is saying D. Why do you say it is D?
Okay.
Because we are dealing with a petty cash balance.
So the answer is D or B. Which one is the answer?
D.
Why not B? And why not A? Let's start from why not A.
Because it's not affecting the petty cash. It's not affecting the trial balance.
Okay. It is not affecting the trial balance.
No.
Where was I writing? Okay. At least this is what I was typing. So when you look at the expenses are shown on the debit side on the trial balance, right? The expenses are shown on they are shown on the debit side, isn't it? Are the expenses shown on the trial on the debit side of the trial balance? Hello?
Yes, sir.
Yes, sir. So the expenses are shown on the what? On the debit side of the trial what? Of the trial balance, isn't it? So now, what will happen is that if the debit side of the trial balance has got a 200 and what? Has got a 210. Hey. The trial balance will be 10, like the trial balance will be 10 quarter, is it 10 quarter higher on the credit side, because you just recorded a 200 on the debit side instead of a 210. So there will be that difference. Let me just ask you this question. Do you see that element on the trial balance which says of what we call the general expenses? The general expenses or miscellaneous expenses. Hello?
Yeah, yes, sir.
I'm asking that when you go to the trial balance, right? Do you see the element of the miscellaneous expenses or the general expenses? Or you don't know that element exists? The general expenses, you have never heard of the general expenses on the trial balance?
No.
Do I have an example of Okay, all of us, we have never heard of the general expenses. Like we have never heard. We just know sundry expenses. We have never heard of miscellaneous expenses, like on the trial balance. You have never seen those. Like for when it, are we sure like we have never heard of that? Okay.
We have
We
heard.
have.
Okay. There is that element. So what do you think the miscellaneous expenses or those general expenses capture? What do they capture? What is captured in the general expenses? Or now I want us to discuss so that at least you understand when we say answer is B, then or answer is A, you know what it means that it is A. We are just discussing. I haven't said the answer. I've not said the answer is A or D or what. I'm just asking that, have you ever heard of that? Or what do you think those elements are, those expenses are, the general expenses? Because you understanding what general expenses are will help you even to answer some questions in financial statements.
So general expense, the total number of those small expense, and it's just a total amount of the small expenses.
Right? Okay. So now, what does the pet cash book capture?
Expenses.
What kind of expenses are captured in the pet cash book?
This emergency, small emergency things like, let's say, you want to buy, let's say, fuel for the company, or maybe you run out of stationery. Those are emergency expenses, but very small.
Oh, okay. All right. Interesting. What about others? Or all of us, we have the same submission. We just okay.
Good evening, sir.
Yes, madam.
What of the petty cash voucher?
At what of pet cash what?